There are market conditions where it becomes difficult to see which pattern or signal is the predominant factor in the market trend. For example, a few days ago, we saw a very extensive evening star signal telling us that the top was probably in. Following day, it closed down below the T line, making this a very favorable situation for coming back to the 50-day moving average. However, a bullish harami on Wednesday was confirmed on Thursday by coming up back up through the 200-day moving average. Stochastic starting to curl back up. So as we look at this chart, we've got to figure out whether the evening star signal, which was substantial, is the predominant factor, or whether we've got a J-hook pattern in progress. That will not be evident yet based upon the amount of information that we have. So with that knowledge, if we knew the markets were rolling over and possibly pulling back, but we were seeing the pre-market futures showing strength, any trading in this time frame has to be done very nimbly, meaning you might be buying and selling very quickly. We've got to have two things happen. One, we need to see if they can close the market more than halfway up this candle that told us the bears are in control. If it closes more than halfway up, that tells us the bulls are in control. Just common sense from the Japanese rice traders. Secondly, if we see another sell signal in here, we know we've got a downtrending channel in progress versus a bullish J-hook pattern in progress. The NASDAQ seemed to have supported on the 20-day moving average, and it closed that back up above not only the T-line, it opened at the T-line today and moved higher later in the day above the 200, also creating a J-hook type pattern. But once again, if it opens lower and trades down, that's an indication that the 200 was acting as a resistance. On the other hand, if it opens higher and moves higher, that's going to be more evidence that the J-hook pattern is in progress. In any case, there are charts that are still acting well, such as IMAX. Gapped down the other day, but closed right back at the T-line, has gapped up above the T-line, and is staying there. This looks also like a good, strong J-hook pattern once it gets started. So don't give up the fact that the potential of the market pulling back is fairly high still. There are still good chart patterns that can easily be found using candlestick scanning techniques. That'll be it. We'll see you in the chat rooms.